How is everyone actually watched the previous video? You're new to YouTube, or this is when you're starting the channel. If you're interested in learning Elliott Wave, if you're interested in asking questions about Elliott Wave, if you are interested in understanding how Elliott can make you profitable and the purpose of Elliott Wave, you can DM me. Uh, Actually, you can just comment. I'll reply to everyone. And if I don't have time, actually, I'll pick up even other people who can be teaching with Elliott Wave. So the main focus of this channel is not to tell you guys how to trade. It's just to give you the market direction, the market focus of what we are looking at and where we would likely be or where we are going in the market. The good part with Elliott, it can give you such big rewards if you're thinking about long term. Let's say, for example, you want to invest your money into anything. You can invest your money into forex pair, you can invest your money into Euro GBP, you can invest your money into gold. But what matters, it's you being a swing trader, which is an investor, so you can stay in your trade for roughly 3 months, 2 months, 1 month, just holding your position 1 week without you not being scared because you know what you're looking for. So the main goal of this channel is to make you guys understand that Elliott is the most important strategy you need to have as you do whatever you have right now, either supply and demand, ICT concept, what else? Moving averages, if you use divergence strategy, all of the strategies actually I know and I use when entering a trade. But what helps me going, it's Elliott Wave. I apply Elliott Wave to my strategy to know how long am I going to be in the trade. If it is the trend about to end, am I trending a trend or I'm trading correction? That's the most important thing which people lose out, because you discover that you're in a trend, you're trading a correction, and then the market just turns from nowhere, and then you're trying to understand what's really going in the market. So with Elliott, it will actually inform you. Actually, right now you're at high risk because you're trading a correction of this move. So right now we are going to break down US dollar index from a previous video. So where we were kind of here trading this move down. So we need to understand what made us go this route, what made us pick that the market will go down. So on the monthly time frame, we had an impulse move. An impulse move is these are 5-way moves. So we had 1, 2, 3, 4, 5, and then so we had this 5-way move down up. Actually, let me just make it clear to you guys. If you do it like this. So apart from that, so we dropped into a correction. So I think this coming down here, it's a correction coming down. It's correcting this entire move. So we know that we're in a correction, so we might make the first leg. So can do reference 1, 2, 3, 4, 5. So we had 8. So after that we had another correction going up. We had 1, A, B, C. So when we were here, actually the market started dropping. So we anticipated that B only because this is more like a trend. So it's a trend coming down. So I'm not trying in the other video actually I'll show you targets and where this trend actually can find support or supply zone or anything just to make it move back up. Because once this is done, because this is like A, B and we expect a C. Once the C is done, once we buy from here, this is the day time frame. Once we buy from here, we can actually wait for the market to take out this high. So our first take profit will be above here on our day time frame, but we can use time frame like 2 hours, 1 hour, 15 minutes, and even 5 minutes on that particular day. If you feel the market has reached our zone and it's making a 10, we can buy at a smaller price with a smaller investment and come back on day time frame instead holding the trend to move from here to that can take years, 1 year, 2 years, 3 years from now, because even just this move to finish, it can take about 2 weeks, 3 weeks, a month or so. Depends how the market is and how volatile the market is. So that's the reason why the market dropped. If you can even understand news right now, what's going on in America, there's a little bit of confusion, riots here and there, people fighting over stuff. So that also impacted the market. So so we saw this move coming down. We knew that okay, we have completed A, B, C correction completed. So when it dropped down, moving down. So after that, I can put back candle. Okay, let me just make this a bit bigger. Okay, this is what I mean. 1, 2, 3, 4, 5, A, B, C. Straight dropping. Straight dropping. So on the first time frame, so after we saw that now, so that okay, we are moving down, the market has finished our wave. See here, we started looking for our entry point. So our first entry, which I didn't show you, will see this was just a 4 hours time frame. We had this trending market. Now we forget about area. Well, since we know that now we have shifted into a shift from an uptrend to a downtrend. So if you're looking for a shift from an uptrend to a downtrend, we need to wait for a break of structure. For us to get in and ride the trend. So you need to wait for a break of structure, package interest to an imbalance, and then we sell off to our expected target. So what was our expected target when this market? So the market was going down. What was our expected target? My expected target on the 4 hours time frame was this down here. It's this down here. And there's proof that I hold this trade to here in the other channel, in the other video. Just look at it. And if you have any questions, you can just ask me. So from here now we notice one thing. I use indicators. If you don't, you don't. Me, I use them. I find them convenient for my trading. So the market was really up here. So here the market reached here and dropped. So one thing as I noticing was this divergence on the forwards. So it's very, very important to have confluences in every market. These things will never go away. Divergence will never go away. I'll explain some other time why I used both of these guys. So even can tell you from here to here market. So even completed shift. So after that, I noticed that I'm making divergence from here actually. So I noticed some divergence, but no actual low was taken out. So when I started observing divergence, when the market reached here, it went into a sword. So I was waiting for this low to be taken. It didn't take out the low. The market moved, creating this low here. So when I came back, just balance up, some imbalance with the order block, and then it moved up. It dropped here, nothing. It didn't take out this. It made equal highs, equal lows, and then it moved up. So when the market just did that, I knew that this market is prone to actually fall now, because even the divergence was quite big from here to here to here. The market lost momentum big time. So we were in good terms with the market. The market did what we expected, dropped to this level here. When the market dropped, and just started looking for an order block using supply and demand, knowing that the market now has dropped, it needs to retest and then start going down. So this was on our first time frame. So if you can see, you had this drop, market retest, and then start selling up. So I'll go to 1 hour time frame. Okay, let me just go back to a first time frame. Just mark out everything first. This is what I actually do. I really don't have smaller time frames that much, because the more you go low, the more they become noisy. So you can notice here. So the market dropped, created this supply and demand zone, take out this low. So this was the first area I was looking at. I wanted the market to come into this and then start looking for selling opportunities. Okay, so this is supply and demand. This is how I combine things. This is how I trade. I don't trade more than this. This is how I trade personally. I'm giving you the information I use actually for trading. So after looking at the supply and demand in this zone, I went down to the market started tapping into our zone, and then from there, so now on a fast time frame, it already supply and demand. Now this is what we call order flow. This is an order flow which I don't even use sometimes. So can you choose this one 1 hour time frame? But this still remains as an order block. So I want to go down to the actual strategy I use now for entries and non-can. That's for the other time, and that's for the other video. You can DM me to learn more. So if initially we just took this trade based on this, stop loss above here. So we had that 252 risk ratio. So we can come back. What's the info? And drop this. Okay. So we have 3,000. Front can be expanded. Front can be expanded. So this is the power of using Elliott wave for trading. So on the first time from the market is dropping, I was so much confident that the market needs to take out this low. So when it started coming down, I knew the market just needs to go down. Because of the same reason I told you, market made a big divergence, dropped. We expect the market to be dropping, and then the market is down now. So we expect the market to going down, to continue going down. This is just pullbacks the market is making. So this was just one of my entries. I use also ICT for entries. So while the market is going down, I also like trading it, making other trades using it. Like using ICT concept, because ICT concept allows you to trade per day. Not every day, but mostly 2 or 3 days in a week or 4 days. We can find a good setup which we can trade per pair if you're consistent with that pair. So I'm out. Thanks for everyone who was watching, and thanks for everyone who subscribed. And I'll wait for questions and those who are interested in learning. Bye. Shout out.